We're back with you, keeping a close eye on our ag commodity trade as we get closer to the weekend, and we're less than a week away from the August supply and demand report from USDA. Well, I'm joined right now by Todd Bubba Horwitz of BubbaTrading.com in Chicago. Always a treat to get to visit with you, Todd, about our market action here. The corn market is definitely in a sharply sideways pattern here, the way it seems, just not getting anywhere very fast. Let's take a look at where we are in the corn market with our quotes provided by Bar Chart. Yeah, let's take a look at this thing and dissect it a little bit. Right now, we do have December actually pushing up by 3 3/4 now at 556 3/4. It's about 3 cents off of our high from earlier this morning or overnight. If you look at the soybeans, now keep in mind we sold 131,000 tons of beans overnight to China. Right now, November soybeans are up 7 at 1335.5. Now, they did sag back a little while, and now they're starting to come off of those lows. We've actually bounced again by, well, on the November, about 13 cents from our earlier lows. So volatile action continuing in the soybeans here. This choppiness, I guess we have to get used to this for a while here, Todd.
Marlon, it's going to be like this for a while. As first of all, it's August, right? So traders and Europe is closed, so that's going to make it slower. We're holding in a range, and look, the overall action is bullish as long as they hold the support levels. We're seeing that backwardate. We had that big backwardation all the way through, and now, as I said a few months ago, it's going to start to collapse. And you can see, like in corn, December's almost ready to go over September. So we're starting to see some more action in the back, which really indicates much more bullish action is coming. And I think, although we're slightly negative here, I think we're going to have a big rally in the third and fourth quarter.
So the December that you mentioned, it is up 2.5 cents right now at 555.5. If you look at a year from now, on December of 22, that one is up 6 1/4. Are you surprised by that kind of strength that far out?
No, I'm not. Marlon, I think that, if we get the economy rolling and if some of the things change and we get past all this stuff that's going on, I think we're going to see much stronger markets. I mean, you can see the hunger from people that they want to get out, they want to go to restaurants, they want to make sure they consume all these products. And I think that's what we're going to continue to see as long as there is an issue that shows up out of nowhere.
Okay, let's take a look at our wheat market then. We'll go to Chicago wheat first with our quotes provided by Bar Chart. You have September up 7 now at 719 3/4. That would put us a nickel off of our earlier high, but boy, we have bounced a dime off of our earlier low of the day. In Kansas City wheat, you have September 14 higher, Todd, at 705.5. And Minneapolis wheat, well, it has been trading higher. We're 10 1/4 higher on September now at 914. Still 4 cents away from our high of the day. How strong is this wheat market? I understand that South Korea may have actually booked some U.S. wheat that hasn't showed up on our flash trade yet.
Marlon, I think we're really strong in wheat. I think we go back to when this original rally started in the grains, about a year ago, and wheat was the first to break out. And it looks to me that wheat is going to be the first to break out again and start to make the next run. And I think that is very encouraging that we continue to see a leader and leadership taking care of here, and we're not getting all of them negative at the same time. And furthermore, they're all holding the support level that they must hold from a technical basis. To me, it's going to be full steam ahead. But in this, again, I go back to this time of year, it's really thin. So it's not the time to start building huge positions, because one order, which could be of some not big size as normal, could move this market quite a bit. And that's what we just have to be careful for, not to get locked out when we're on the right side of the market.
The most impressive thing to me about the rally in wheat is it's at the same time that we have September U.S. dollar index futures 573 points higher at 92.825, and it's still surging ahead in the wheat anyway. That is impressive. We'll come back and take a look at our livestock trade in just a moment, Todd. Let's take a look at our livestock trade with a little help from Todd Bubba Horwitz, BubbaTrading.com. Let's go to live cattle here, Todd, and see what's going on. So we have a rally going on in the grains, and the cattle market, they're just narrowly mixed. Let's go with October on live cattle. We're 12 lower at 127.45. December 30 higher, though, at 133.07. On the feeder cattle side, you have the September contract up $1.15 at 162.30 per hundred. So triple-digit gains there on the feeders at the same time that we have the corn market a little higher. That's very intriguing too. And we had the new beef cutout values that came out from USDA a little bit earlier today, and we had the choice cuts gaining $3.15, selects $2.84 higher. All around, a pretty strong day here in the cattle complex, isn't it?
Well, Marlon, listen, first of all, you said it best. With corn rallying, so are the feeders, and take it, then they were lower to open, and his fats were also lower. Fats are back to about unchanged, which is pretty strong, but feeders in the face of corn going up at the same time, very impressive, and I think cattle looks really solid. And again, these all go back to the demand that's going to come, plus the demand that we have now. You've got everybody getting out, and they're letting the ballparks all open now. So that's just a lot more food being consumed, which is going to use a lot more beef.
Let's take a look at our lean hog trade then and see what's going on over there. Now, this is a market that looks a little tougher on the charts. The October contract on lean hogs, that seems to still be where most of the volume is. It is down a dime at 87.02. And you go out to, let's go with February. It's still trading at a discount to the October. We're at 84.42. That is 42 cents higher. So a little bit of spread activity apparently taking place in the lean hogs today.
Well, and I think you also have, you've had a pretty big rally in the hog market, going back. And of course, we've come off those highs. But, we've been really strong. If we go back and look back 6 months ago, or 8 months ago, we're really much higher than we were. And I think you're seeing a little bit of a rest, but these look to be in another stage, getting ready to make another pop to the upside. The barbecuing season is getting closer to ending, but I think there'll be a new season. And listen, football's coming, and that's just another 100,000 people per stadium sitting around eating. So I think things look pretty good.
Do you think the equity markets have anything to do with livestock trade these days?
No, equity markets are totally in bubble territory on their own, and they're really just playing the cheap money. And unfortunately, the beef is not cheaper. It's more expensive at the stores, and that's the issue. But I think the equity markets are kind of in dream world right now as they continue to push rates down, making it the one place where money has to go.
And September Dow futures now up 164 points. Todd, great information. Thank you, sir. Appreciate it. You have a good weekend. Todd Bubba Horowitz of BubbaTrading.com. Tammy, back to you.